Okay, it's 2:48 on December 13th, Friday the 13th, and we're going to take a look at what happened with the Alibaba. Well, as you remember, when Alibaba opened up this morning, it was 204.50. Now it's 204.87. And when you looked at the 200 and the 202, it was looking like I was going to lose about $900 on one and $300 on the other. What I ended up doing was going in till next week and rolling it to 202.5. You might say, why didn't I take it to 205 or 207? Because I honestly feel with it jumping up as high as it did over the last 2 weeks, from 182 to 204, that there's a good likelihood that it will probably drop down below 202.5. And if I need to pay some back on my mark, I'll pay it back next week. But I bought myself some time. And that's what you do when you're rolling something forward but rolling it for less. So I rolled it for 202.5. And rolled the other one that was at 200. I rolled it up to 202.5. So how much did I actually have to pay back? Well, I went ahead and made the trade. And so next week, when I do these two and these two, which are now four, the trade price will be $1,760. That's about, I don't know, $440. Looks like 1760 divided by 4. $440 is what I garnered out of this trade for this next week per Alibaba contract. So how can I go double check that and see what I paid and then what I set as a premium for next week? Well, let's go over to activities and history, and you can see what's happened in the last 7 days. My filter here is automatically set for 7 days, so I got it set for December 6th through December 13th. So I had to buy back the Baba for today at 200, and I bought it back at 505. So that was $1,000 that I bought back. And then on the Baba for the 202, bought it back for 271. So there were two of those, and bought it back at 542. So between the four, that was 1,500. So what I did was 1,552 to be exact. What I did was went ahead and put a 202.50 twice out there and sold them for December 20th. And if you don't want to see the other things out here, the Chronos at the bottom, you can always go over here to the filter and type in here the symbol and let it go back up, and it'll just give you Baba. So we have the Chronos out of the way. But anyway, in general, I had to pay this because it went, $5 over the strike and $2.50 over the strike, and I got this for next week's trades. So that comes out to $1,760, and ended up paying back the 1,000. So really, all I'm out is the 1,500 minus the 1,760. I'm ahead of the game by $260, and the stock is worth a lot more than what it was before. So when I take a look at the stock and go back to the portfolio, how much have I gained on these two leaps? Well, here's the first leap at 145. I am so far ahead $1,364. I have not lost any money on premiums, and if I want to see how much I've made, I'll show you how we do that. And on the second one, which has a strike of 170, next September 18th, 279 days from now, it's up 647. So have not lost any premiums, but actually went back to 647. And look at that, Alibaba is moving downward, 204.99. When I made my move and did the roll, it was 205.02. But it's too close to 3 o'clock to be playing around with it. So it's 2:54. Got 5 minutes till the market closes. What would have happened if I would have let that go past 3 o'clock? Well, I would have had to go out and pay the 4 contracts of Alibaba. I would have had to buy those contracts back at 145 and 170. I would have had to come up with, it's running for 20,000 and that's 14,005. I would have had to come up with $5,000 on the first one twice, which would have been $10,000. And on the second one, I would have had to come up with 170. I would have had to come up with about $17,000 twice, and clear everything out and end up making, as you can see there, about $2,000. So I would have been playing around with about $30,000 to make $2,000 in the end. But because I rolled the 2 different strikes for December 13th and moved them to December 20th, I'm sitting pretty good. I'm not making nearly as much next week because I rolled part of my loss over to next week. But the gain that I made for next week, the 1760, helped pay for the loss that I had this week. This doesn't happen very often. I would say that probably 1 out of 30 trades just blows way past your strike. And I remember when I made these, they were $182. And it blew right past my 200 and went up to 205, which is great. They call this a rich man's problem. You not only made all the money you thought you might make by stock value, but you made quite a bit in premium and had to pay part of it back to the other end, the buyer of your contracts. So looks like at 256 that Alibaba is going to close at 204.56. So in general, this is what I did. I took this and I rolled it. And if I wanted to roll this again, I could go in there and say, all right, I'd rather roll to December 27th and come away with about a $83 contract. I could actually make that move right now and be 83 ahead on this trade. Now, if I went down and hit review and send, I'm moving that 202 to 202 for the 27th, and it's actually saying that we're going way past the date right now. But anyway, I'd be making $80 on each contract, and there's 4 contracts there, but I only put that's only for 1 contract, 85. I'm not going to do that. I'm going to wait and see how it goes next week, see if these 4 for December 20th at 202.5 shake out well. If they come in at 202 or and a half, anything between that and 205, then I'm ahead of the game because I would have paid the full 205 this week. But I paid a little bit to give myself another week to watch it and see whether it goes down. If it goes up way above 202, then I'll probably close out. I don't like to roll more than 2 times. That was my first roll. I can do it again and take a closer look at it, but at this point I've rolled once and taken my $1,760, put it into my account, paid the $1,550, taking that out, and for this next week I'll just make $140. As you remember, before that I had made about $1,200 and I got to keep it all because I paid for it with this roll. So if I were to go back now and take a look at the activity on Alibaba, let's say for the whole month, let's do that. Go in here, take a look. Let's go back well, yeah, that sounds fine. I think that's about how far back we go. Anyway, if we go back to L22, it's saying that I've made about $610 off of the premiums so far, and haven't really had them that long. Looks like here's where I bought them at. Bought them December 2nd. And looks like 11.29. So bought them at those two times. And right before that, I had sold Alibaba for $20,000. Let's go see how we've done so far this year on Alibaba. So we go in and put a custom date in. And we'll start it from the beginning of the year. Go up here to January. Might as well make it the 1st. Change it. Now it brings up all of Alibaba. And it says that we should have $15,120 in there because that's how much we bought and how much we sold. So how do we know how much we actually have? Just go to our portfolio and take a look at what we could get out of this today, which is $20,120. Remember, we've got this 1670 out there shown as a negative. So add the negative to that and you get these two numbers. 12.9 plus 8.9. Let's call that 9 plus 13 be 22,000. Short about 80 and 70, so it's about $21,940, something like that. So anyway, this is not the true, the 20,180 is not the true liquidity. It's these two leaps plus the actual gain here. So when this goes down to 0, which I'm hoping it will by next Friday, that's how much it'll be worth. So we're looking at about $22,000 on an $18,000 gain. So instead of, it says I've invested $15,000, I've got 22 in it. So I made about $7,000 this year on Alibaba. And how much have I, generally, it changes all the time. I'd have to show you the spreadsheet on return on capital, but generally I have about half the year I had about 20,000 into it. So really only about probably 4 months with 20,000 on Alibaba because I stayed out of it for quite a while when it was bouncing all around. So to make 7,000 in 4 months on 20,000, that's 30%. If I could have kept it in there and made the same amount, which is very hard to do because when it starts to bounce around, you might want to jump out. I would have made just almost 100% return on investment. But 7,000 into 20 is about a 33% return if I kept it at 20 the whole year. Like I said, I wasn't invested the whole year on that. So anyway, that's how you look at it. You can go over and do your activity and you can calculate whatever number of weeks you want to carry something. Let's see if I was accurate, how long I actually have carried BABA. Here's another thing that you need to learn when you're trading and investing is your memory is not nearly as good as you think it is. It's kind of like when you go and gamble, you only remember when you win, you don't remember when you lose. That's why numbers don't lie. Run the activity, look and see what you did, and then you can actually make some logical decisions. So here's my moves in December. Here's my moves in November. As you can see, looks like I got back into it on October 29th. I got out of it in July. So looks like July, August, September, and boy, gosh, I didn't realize that long. I sold these. Yeah, look at about 4 months I wasn't in there, and with BABA. And then before that, I had it all the way up through June, May, April, and then nothing before March 2026. So I wasn't in Alibaba during January, February, most of March, And then I wasn't in Alibaba from July 2nd to October 29th, which would have been another July, August, September, October, 4 months. So that's 6 months. And then I'm in it now. So yeah, we're looking at totally for the whole year. Looks like I was in it for 6 months, made $7,000. On average, it was different amounts, but at the high, I'd say at the high it was 20,000. When I first started, I just go back and take a look and see how much I invested. Well, I bought Alibaba. For $8,000, made a premium of $200, bought back some Alibaba at $445. Then I sold all the stock for $8,600. So from there to there, made about $500. And then I bought Baba for $5,000, got a premium for $305, and this is on the same date. Looks like I bought another one for exactly the same amount and exactly the same premium. You can tell at different times. It broke it up into two, so I had two contracts. And how much did I make off that, or not make? Because I think I lost some money somewhere along the line there. There was a drop back. So anyway, made those two premiums of $305. Then made that premium of $346. I bought it back a little bit this week so I could go ahead and reinvest. And then I sold everything again for $11,500. So you're looking at 58 and 58. That's $11,600, and I sold it for $11,500. So, you know, if I were just trading stocks and doing a buy and hold, I would have lost about $100 on Alibaba on the product that I bought on April 8th and sold on April 26th. You'd say, why did you sell it so quick? After you just bought it a couple weeks earlier, why would you lose $100 and jump out of it? Well, I was actually doing the premiums and they were jumping up, and I got some good premiums out of it, so I didn't lose $100 in the total transaction. I lost $100 on the cost of the product, the stock, but I gained $305 plus $305 is $700 plus $342. Now you're looking at about $950. Now I gave some back, $36. So I made about $900 on that transaction. So instead of losing $100 by keeping a stock for a month, I actually gained $900 because I was doing covered calls. And that's why we do this whole strategy. Is the cost of the product is your assets that you have in your store. So just like when I ran a Best Buy or a Circuit City, yeah, you have to pay so much to have inventory on hand. You know, whether big store, small store, whether you have $1.8 million or $1.2 million in inventory, you've got to have that to be able to make your weekly sales. This is being treated the same way. So I invest, towards the end here, towards the end of this particular example, I invest $20,000. It looks like here in the beginning I invested $8,000, and here I invested, $11,500, and then here I invested another $8,000. I really didn't have $20,000 in the account until we got to the November time period, and here I sold it for $7,000, and back up here we have the 8,000 and 8,000 in November, and 8,000 and 8,000 is 16,600, but we sold it for 18,000, so that's about an $1,800 profit. But look at the premium I made in the middle. $1,800 profit on the cost of goods, $660 profit, add that to the $1,800, now you're looking at about $2,500. Then I go back in and I bought a couple more, and that's how we end up selling it for sold Alibaba for $20,000. How much did I have into it? This particular time we had 1,000 plus 8 plus 8. Let's call that 9. Looks like we had about $19,200. Sold it for $20,700. So I've been riding Alibaba as it's going up, and each time when I actually do hit a strike price and go ahead and sell the product, the original stock, I'm making about $1,500. And then on this last round, let's just go up here at the top. This last round we paid 5 and 5. For those two particular, that's 1 and 1. I have 4, remember, and then 57 and 57, and then 8. So you're looking at about whatever $18,000-$19,000 is what I have invested, and that's really what should be showing over here on the portfolio. When I go over here and look and see what I have invested, you take the September 18th, invested 11.5, and you take the 8,000. Now you're looking at 1919, so about $20,000. But when you go back over and look at the activity, and you say, okay, he's got 19,000 invested, but how much has he made in premiums? Well, paid that back in premium, 1,000, but I made 800, so we're about $130 ahead. Then bought back 500. Now we're 600 behind. Oh, excuse me, 500. We're 400 behind. So that plus that is 1,600 minus 870. Let's call it being 500 behind. And then made 890. So now we're 390 ahead. And then 318 ahead of that. Now you're looking at $700 ahead. And then just about even. And then another 70. So whatever, that's about 750 ahead. And another, where's our person? 440. I've lost track now. I think we're talking about $1,100 ahead. So $1,100 ahead from 1129 to 1213. Not so bad. Give me a second and I'll pull up my spreadsheet and we'll take a look, and I'll show you the spreadsheet that I keep track of each week from these activity levels to kind of keep things sorted out. So I call it my return on capital spreadsheet.